Hey guys, how you doing? Good evening, good morning. I was gonna say good night, but I'm not gonna say that. That's gonna not
Put
sound
him to
right.
sleep.
um, Hope you guys are doing well. Like I told you on Sunday, the market is gonna be a little bit choppy, and pound did finally break out of level 3 today. But I'm just doing a little quick banter over here for another minute or so until people come in. Um, just want to let you guys know I've been getting some emails regarding people accessing DMRs on the forum. Okay, so for this week only, everybody has access to the DMR section in the forum, so you get to review stuff. Starting next week, only those people who are part of the DMR can only have access to it. The people who are not will not have access to it. Okay, the DMR, the videos are going to be up for 24 hours, so you guys can view it. As of right now, we seem to have 2 videos up, so we just kind of flip flop. So one will be up, and the next day the other one come on, and then they'll so it probably stays on more for more than 24 hours, more like for close to 48 hours. Like a 2-day cycle. For those people who can't access the recording because you got to leave early, or just got to finish early, or close up early because you want to sleep, get up in the morning and trade, things like that, just use Firefox or use Google Chrome to access the forum. Then you can easily see the videos in there. A lot of people have been texting me or even emailing me through the forum, through email, and saying they can't see it, but it is there. You just have to use, Internet Explorer apparently doesn't work properly. And then when I went in through there, and I can understand the people's frustration, it says like, the 17th and the 9th or something like that of August stuff in there. So it shows like very old dates, and then nothing pulls up. It's just like blank screens with gray screens and stuff like that on it. But if you use the right vehicle to access the DMR recordings, you should be able to access it. Okay? I'll actually put a note up in the forum so people are aware of it. Okay, so tonight Kim is going to be presenting, and I am actually going to switch it to her. Okay, Jose said she can't hear me. I was going to tell him to do anything, but he can't hear me, so it really won't matter. It really won't matter. Okay, yeah, the recording, the blurry.
I'll type to him. Oh, he left. Okay.
Okay.
He must be coming back in.
Yeah, the Internet Explorer was fuzzy. Okay, so what do is just try Google Chrome or Firefox and see if there's any difference in it. Okay. All right, so let's transfer over to Kim, and here you go.
Okay, everybody see my screen?
Yes, ma'am.
Okay, good. Welcome again, everyone. I'm Kim, and I wanted to welcome all the people who are here on the trial basis who haven't been in the DMR before, and of course, welcome everybody who is a current member. Anyway, let's go ahead and get started. One thing I wanted to say was that we have been trading in ranges, if you have noticed, and so you're not going to see stop hunt. Somebody saying no screen here, Bill. You might have to go log in and log out. Anyway, we've been range trading, and with range trading you'll notice they bring the market up and then they take it all the way back down. They bring the market up, they take it all the way back down. They bring the market up, they take it all the way back down. So I'm not going to have tonight, is going to be the first time that you're not going to see an expectation as to hit the stops high drop or hit the stops low rise, because I really believe that for the next week in particular, you need to only trade what you see and trade the patterns. Remember, Steve said the most important piece that you can learn in his methodology is the pattern. That is the most important thing that you can do when you're trading this methodology. So for tonight's session only, going into tomorrow, I am not going to have any sort of bias. Again, I just want you to really focus on trading the pattern and trading what you see. because of the ranges that we're now in. And I also wanted to let you know that historically I have taken off the last week of August and the first week of September from trading. I usually have some kind of vacation or something. And it's because of this very fact that it is very range bound, and you can get some weird spikes and moves, but you can still trade, but you just need to be very, very, very selective. I'm not going to say, and I'm not going to say the word be careful, because if I say that to you, that means, oh, this is a big, bad, frightening, scary market, and you better be careful. No, I'd really rather have you think about just being highly selective, okay? So look for the pattern and only take the trades that you know you can clearly document the reason why you took the trade, and you really understand what you're doing. So a little switch in focus tonight, but I think it'll be well worth it as we come into the fall season where trading is going to get a lot of fun, and we should get back to some normal trading after the Labor Day market. Okay, so having said that, I am going to go ahead and get started with the euro. So I am going to just talk about what we see tonight and how we trade the euro. You can see here's the box. We had just a slightly blown box. We had a nice pin here trapping the trader short right in the end of the Asian box, and you can see price came up and did 1, 2, 3 to the high here and threw this inverted hammer right here. Now you're inside the range. Can you trade this? Yes, but is it ideal? No. Why? Because it's in the middle of this range. It's not at the high of the day and it's not at the low of the day. Remember, we talked, and Carr has always stressed that we want to make sure that when we take trades, we're trying to take them either at the high of the day or the low of the day. So coming out of the box, yes, we had 1, 2, 3 to the high, and then price pulled back down, so we had essentially 1, 2, 3 to the low, and price came back up now. And so we had the first swing up, we hit the stops low, and at this point when it closed above the Mayo, you could have taken this long. Your stop would have been really wide. For push 2, they hit the stops low here, and then push 3. Now I don't know if anyone traded this, but this would have been the 1, 2, 3 to the high overnight if you were a London trader. Now when I get up is right in here, so when I woke up, I saw this starting to form, this red railroad track, what I perceived as the second leg of this M. I'm at the high of the day. I see this action where price comes up and doesn't quite break the high, closes inside of this, okay? And then this candle actually extends the high just ever so slightly, trapping traders, inducing longs, and then pulling back viciously on this candle. So when this formed, of course, I quickly measured my 50% as my entry technique, and I waited. And you can see I had to wait for 1, 2, 3 candles, and I actually got in on this candle as price was coming up into this. And you can also see that price still closed right within all of these highs. So even though honestly, I was getting a little bit nervous, but I know enough that I can see that, okay, I'm going to be, the trade's fine. The trade's solid. I have an excellent reason. It was a second leg M. I have already had 1, 2, 3 to the high. And once they closed inside here, I knew I've got no issue. Now, the next candle, you can see they came up, and they almost hit my stop right here. Okay, and I will actually show you my entry, what it looked like here. So you can see it. So this is what it looked like as this thing had just formed and price was coming back. I actually entered right here. Okay, so this, you know, because I know a lot of traders say, well, these things are easy to see in hindsight, but let me see, what did it look like when you actually got in the trade? So I try to take screenshots of my trades as I enter so everyone can actually see what I'm seeing. Okay, so that's what the trade looked like when I entered. Now, let me show you what the trade looked like on completion. So now here's the trade. Let me see if I can blow this up a little bit. Yeah, whoa, not that much. Yikes. Okay. So here was the entry. You can see it marked off. The stop was above here. And you can see price came down, beautiful follow through, and as it just after it limited out, I took the screenshot so you could see the completion of the trade. Okay. So that was that. And then, so price came down. It was about here. This is where I limited out. It was very quick once it got underway, and I was done on that trade. Some people, if they were trading the New York reversal, may have wanted to take this back, although I wouldn't, only because I really technically only see one push down here, hit the stops, and then the second push, and then back into the water, like Steve says. Okay, so you can see what they did. They drove the market up, and then they took the market down. So that's what I mean by range trading. We're just going up and going down. We're not really in the trend that Steve teaches us, where we trade off a peak formation low, let's say a W, and then we have 2 days of rise. We go into chop level 3, if you will, and then we look for an M, and then we drop and we go down for 2 days. So really we're going up and down, okay?
They would like
So
to know what
tomorrow,
your stop loss was on that, Kim.
yeah, it was about 25 pips.
Okay, thank you.
Okay, let's go on to the Euro Yen. Okay, let me blow this up.
Can you show can you take this? Can you show the same trade on the half hour? They want to see what it looked like on the half hour.
The euro dollar?
Yeah.
Of course, absolutely. Here it is on the half hour. So essentially, I was getting in on this green candle as it was coming up. Okay, so this is like the big inverted hammer, which is your railroad tracks, right? Because the railroad tracks, the red candle was actually longer than the green candle, so it was like a bearish engulfing candle, if you will. That's why you see this inverted hammer thing with this huge spike here, pin. So same effect you would measure if this was just like on a 15-minute, you would still measure, or would want to measure, halfway into it to control your risk in the trade and get the best entry you can. Okay, and then, yeah, this candle, good thing I wasn't looking at the 30-minute, David. But I did say, I did get a little, you know, a little nervous, but that's, you know, that's normal. But again, like I said, I had documented my 1, 2, 3 to the high. I saw it was a second leg of an M. It was a railroad track. It's a confirmed M when you have a railroad track on your second leg. So there really wasn't anything to be afraid of other than getting stopped out, which, hey, it happens. It happens.
Part of the business, right? Part of the business.
Part of the business, man. Yep. So that's what it looked like, and here's that big green candle that you see on the 30-minute. These two green candles. So.
What time was that railroad track?
This railroad track here
Yep.
was, yeah, at, oops, let me see, it was at 5:45 my time in the morning, so that is 9:45? 8:45, 8:45.
Mm-hmm.
It was right after the red news had come out. There was red news at 8:30, so this was right after the news came out. On the close of this candle, I said, oh, nice, look at that pattern, beautiful. Okay. All right, let me go on to the Euro Yen. Now, here's the Euro Yen. We had a box that was blown, 72 pips wide. This was an interesting pattern. Price came down. It looked like 1, 2, 3 to the low. You had 3 beautiful swipes through this pin bar, and obviously we're not up, or London traders aren't up typically to trade off this bar. But this definitely was a trap move inducing shorts, and then they pull it right back and close up above the blueberry. And then kind of went into this, went back to the water and then chopped around in here like mad. Then they threw, another, it looked like they were just gathering contracts is what they were doing in here, trying to induce shorts, get people to go long. I mean, they were whipping it all over. Then you had two nice green candles up, and then it just went like in this range, right? And here's where, okay, I saw this railroad track, and I thought, okay, we're still inside the high here. We're not up at this high of the day. Let me try to take a position halfway back up this candle and see if I can get some, at least down to the blueberry, because that seemed to be holding price all throughout the overnight session. Well, it came down about as far as here, and I got stopped out. You can see what happened. It took off and jumped up here. So that was a trade that I got stopped out on. And, in hindsight, should I have taken it? I felt like I had a good reason to take it based on this pattern right here and the fact that we were still holding the highs, if you will, because we weren't closing above them, although we were poking above them. But again, I realized I was in the middle of the range because here's really the high of the day. Okay, it was the overnight high in Asia. So it was a little bit risky entering a trade here, but I thought I should give it a try and see if I can get down to the blueberry, and it just didn't happen. I think I had like 14 pips at one point in time down here, and it just, came back up against me. So that was that. And this EJ right now, I just noticed this later in the session that this was yesterday's high, these pins here, and it fell nicely. So I don't know if now we've got a railroad track. It looks like we've got 1, 2, 3 to the high. Now we've got 3 hits to the high, and it might be dropping from this point. But again, trade what you see, okay? So
Aaron would like to know if the 2 pins to the water would have tempted you. And I'm not sure where he's...
to the water.
2 pins to the water.
To exit?
Yeah, right there. The
well,
railroad.
you mean right here?
No, to the right.
You mean right here?
To exit. Oh, yeah,
Yep,
right,
right
there,
there.
I guess. Yeah, yeah.
Yeah, they would have, except I was already stopped out up here. So, because I had gotten in here. And I didn't want to give it much, so I got stopped out really quickly on this one. Okay, Euro Swiss. This thing when I got up was just, I had this gap on my chart, and here's the news candle right here, this red one. And I just said, this is garbage here. I don't even care what pattern's here. I'm not trading this thing. I don't care if it comes halfway up into here. I am not touching it. And here was the railroad tracks at the Mayo at what ended up being the low of the day. And I did not, because I had already made up my mind, I didn't want to touch this pair. I didn't even attempt to trade this. And this thing just was throwing, let me blow this up, big spikes everywhere. Like if you can see this candle, the spike is up here and there's a spike down here. And I just, the only place logically, if you wanted to get in this trade that I would have felt good on, because it never came back and came into 50% of this track. So the next place to actually enter this would have been on this close above the water and then wait for price to come pin the water and then try to get in the trade. But that would have been the only place I would have gotten in this trade, because the water is already above the mayonnaise, so it's hinting that we're still long on this. Okay, so I just took this one off my radar. Didn't want anything to do with it, and I normally love this pair. So, and now here's the pound. This was the trade of the day for a lot of people, I'm sure. So here's the box. We have a nice box, 24 pips. It's not blown. And they come out of the box, and you can tell this isn't the stop hunt because they only go 10 pips here to the high. And they go 3 down, and we're still, if you notice, it's still closing like right inside the Asian box. So this wasn't the stop hunt either, if anyone thought that was the stop hunt. And then they came and they did 1, 2, 3 to the high, and let's see if we measure this. It was 32 pips to the high, so it's in that 25 to 50 pips above the box when you don't have a blown box that you look for them to hit this or throw this, do the stop hunt, the 3 swipes, and that's exactly what they did. And through this railroad track here. Now, you would have wanted to gotten in here, like here. You could either get in here on the close of this candle, or you get in right on the 50% if you wanted to, because this kind of makes like an M right here. Okay, with a pin up here, and then it closes back in the range, and that is what we call a confirmed M, even though it's not at the prior high of the day, because a lot of times you like to see these confirmed M's or W's at a prior high or a prior low. But this was a very good telltale sign that this was the stop hunt. They were done in this area. They held the market for 30 minutes. They came up to try to induce some more longs, and then they pulled back, closed back inside, and then it was like done. They took it away. So that was a great trade, and I hope some of you that trade London got this, because it was an easy 50 pips down to about there. So you would have been done, and I know my friend Danny from Australia got this trade because he was trading the crap out of this pair. And then they hit the stops high here. They formed this big doji. And let's measure this. So you can actually measure from here to here. And they hit the stops high at 30 pips. And they come near the 13. Once this candle turns red and closes red, you could have gotten in this trade for the second push, because this really is only the first push. They hit the stops high. This is push number 2. They hit the stops high, pin the 13. Another entry could have been had right here when they closed below the blueberry, and then for the final and most vicious of the pushes would be push 3 down to the low, and then they just hung out here. So this, I think, was probably the cleanest and the best trade overnight that I saw, that set up beautifully with 3 swipes to the high, 25 to 50 pips above the Asian high, with a box that's not blown, an M, a confirmed M, and 1, 2, 3 to the low. Okay. Okay, pound yen. Pound yen did have a blown box, and so this pair just was coming out of the box, just chopped like hell. The water has crossed the Mayo now to the downside, and this was just brutal. I hope no one got in this. And I just personally, I saw nothing to take on this trade. I didn't like it, and when I see crap like this, I pass. I'm like, there's better things. Like, who wouldn't want to trade this compared to this? Forget about it. So move on. So now they've done 1, 2, 3 to the low. They came back to the water, and now they're just sitting around here. Okay, they pinned the blueberry and the Mayo. So, and again, on these, trade what you see. No bias from me on these right now. Here's the pound Swiss. Pound Swiss did not have a blown box either. Had this going on. Pins to the high. 1, 2, 3 to the high. Drop. Railroad tracks. And you would not want to get long on this railroad track. And the reason you don't want to get long is because this essentially is like an M pattern, where they're a confirmed M, multi-session, inside the Asian box and right outside the box, the start of Europe, London time frame. And so now your bias should be short on this pair. And the only trade that you would want to get in is when it started pinning the water here after this railroad track was formed and they kept closing red. It would be very safe to enter at or right near the water as they pinned, because they threw 1, 2, 3 pins and then started dropping it. But this, you know, this just wasn't really clean either. And then you could have, after it closed here, you could have waited as price pinned the Mayo, and once this candle turned red, then you want to get in this trade short, okay? And you might have gotten spooked out here as it did this spike to the high, but you know, your stop would have gone above here, okay, if you had gotten in here. So you wouldn't not have been in any danger of getting hit on your stop, and then it just dropped like a rock for the final push. So they did 1, 2, 3 to the low on this one too. And then after they did that, they threw the railroad tracks and came back to the water. You know, and some of these are doing just like Steve's taught us. They come out of the box, they make the pattern, they do 1, 2, 3 pushes up or down, and then reverse back into consolidation at the water and hold it at the water. Okay. Here's the Australian dollar. And the Aussie dollar also had a blown box, and by blown box I mean it's greater than 50 pips. So Steve likes us to look for the stop hunts high or low out of the box as long as the box is 50 pips or less, and Ray has an indicator that's going to help draw the consolidation zone if in the last quarter, 1/3 of the box, if the box is blown, because that's what you're supposed to do to analyze where the stop hunt might be. But in this case, you can see they came out, they hung out right here and dropped down to the Mayo, came back. I mean, this is real choppy. I would not have traded this at all. I wouldn't have traded any of this. This was just red, green, red, green. There's no flow, there's no movement. Okay, it through this railroad track. You know, is there a pattern here? I don't think so, other than you can say there's 1, 2, 3 to the high, but it's not, you know, I'd like to see this up here. I'd like to see it at yesterday's high of the day. That tells me I've got a confirmed multi-session M, and I would, you know, be all over it. So could you have traded it? Yeah, but it's sloppy, and I wouldn't have traded it. It's just, it's you know, it's not. You want to take, like I said, you want to be really highly selective so that when you put a trade on, you feel comfortable in the trade and you can really understand why you put the trade on, and even if it goes against you, you have a good reason for taking the trade in the first place, and you're not just shooting at anything that moves. So I wouldn't have traded this. This is just, you know, this is garbage. So, wow, and it's moving for some reason. Must be news. Anyway, so on this one, let me just look at this big picture here. It's just chopping around. Looks like we've got, you know, a head, shoulder, shoulder. So we might have a head, shoulders pattern up here. But we'll have to see. But again, wait for a confirmed pattern. Don't just try to take a trade because you see a red candle or railroad tracks. And here's my favorite one, the dollar yen, which we don't trade it, but it gave a really nice confirmed W down here. It came down, it hit yesterday's low right here on the blue tracer. Through this, came up, came back down, closed still above yesterday's low, and through the railroad tracks here, which is a confirmed W, and you actually could have entered this trade. And I know this looks like it moved a lot, but it hardly is any pips. So say you got in here. Up here, you still wouldn't have had your 50. You would have had to wait in this thing for hours before you got your 50 pips. So, and then you can see clearly it did 1, 2, 3 to the high, and it did it over 2 today and then 1 just now in the Asian box, and then throws a set of railroad tracks and is dropping. But we usually don't trade this. I just wanted to point this out. This is an ideal pattern. It's also 3 hits to the low, so it's 1, 2, 3. Those pay, as Steve would say. So it's more for pattern recognition on this one than actually trading the pair that I wanted to point out to people. Okay, here's the dollar Swiss. Now, the dollar Swiss, this one also had a nice box. It was less than 50 pips. I just don't see how you could have gotten in this on this first move down to the push down to the Mayo. It was like they came up and it was a straightaway out of the box down. And they then through this pattern where they pinned yesterday's high and then came back and closed here. I don't see really a way to get in here short back down to the Mayo. So what I do see though is if you look here, there's 2 pins to the 13, but I probably wouldn't have traded that. But I'll tell you what I did trade, and then it came down and made push 2. So we've got push 1, hit the stops high, push 2, hit the stops high, they come back to the water, and they throw these beautiful pins at the water. So believe it or not, I took this trade right here off the water, and I had like 25 pips at one point, and I turned my back away because I was doing something else, and I have my stop in place, so I'll be a son of a gun. I wasn't watching it, because if I had been watching it, I would have gotten out down here on this green candle, and so instead it hit my stop and I lost 15 pips on it. So let me show you what that looked like, because I did take a screenshot of that one too. So even I make stupid bonehead mistakes sometimes, and that's the thing, you know, even though you have your stops in place, if you're not paying attention, when a candle pattern appears to exit, you might miss it like I did, and that's really stupid. So learn from me. So here was the trade as I entered it. I entered on the close of this red candle after the second pin was formed. It closed under the Mayo. That was the second reason I took this trade, and I was looking for it to do push 3. It had done push 1, hit the stops high, push 2, hit the stops high, and now I was looking to trade to push 3, and then you know what happened.
Well, some people have a question on your push 1. When it came back down and it looked like something like a W pattern, why didn't you go long on it?
Oh, on that? Yeah, I know. There were some people in the forum that actually took this long because of what I actually said. Let me go back to the chart. Because I had seen this as push 1, hit the hit the stops high. Okay, so I measure 32 pips, and we know that typically they hit the stops high, especially like on a pair like the Euro or the dollar Swiss. They're going to hit them 25 to 35 pips. So it hit 32 pips. So I knew push 1 was done. Push 2 comes. Now this is when I wake up. So in reality, I'm not awake here. This is at 1:15 in the morning my time. I'm not up. So another reason I wouldn't have taken it. But this was not a reason to take this trade. Again, it was in the middle of the range. There was no green bullish candle. Even if you were thinking this was a railroad track, this wasn't. So, and again, it was only it was still in push 1. They hadn't, push 1 they completed when they hit the stops high, and then they dropped it. But they hadn't really started push 2 even as of yet. So you would be looking for them to make push 2, which they in fact do down here, and then they hit the stops high again. Now I'm looking for push 3. So I'm waking up. So here they hit it 25 pips, so I'm like, okay, that's great. I'm awake. I see this happening. I wait for the news to clear. The news clears right after this candle. On the close of this candle, the red news is done. I get in the trade. So one, I wasn't up here, and two, I wouldn't have traded this. There was no reason to trade it long at this point. They were still making pushes, and this was not a railroad track. I did not see this as a railroad track. Okay, hope that answered the question. And then you can see they totally took away everything that they dropped the market, and they completely took it all back up here. So that's what I mean by this is range trading 101 right now. So you have to trade what you see purely. My thought anyway. Now here's the dollar CAD, and this is just really garbage. When you see this, I just couldn't see anything, even as a London trader, because the box is not blown. So even, we want to look for them to run the stops high 25 to 50 pips or run the stops low 25 to 50 pips, neither of which they did. The only thing that they did that you could actually see was that they did 1, 2, 3 to the high, but I wouldn't have traded off of this. I don't like this at all. I just, well, I don't trade the CAD usually, ever. So there was really nothing to trade on this. And then there was some red news, which this was on this candle right here, this big long candle that drove it, so you probably wouldn't want to be in a trade anyway. So really you can see it was stuck in this range here, in this 24 pip range essentially. It was real tight on that pair the entire night. So you know how Steve talks about drinking Red Bull and smelling and stuff. That's a trade that would have drove you crazy if you had been in it, because it was down, up, down, up, down. It was just all over. Okay. So that, I think that concludes all the pairs that we look at. And of course, I want to show you the Dow, how this stuff works. And even on the Dow. Coming out of the box, they throw the railroad tracks pins to the Mayo, and then you can see 1, 2, 3 to the high, and then they dropped it. This is the Dow futures, actually, not the Dow itself, the Dow futures. And then gold, which everyone knows took a big plummet off of its peak formation high yesterday, and then today again it dropped hugely. All right, so would we like to, are there any questions?
Yeah, is this the candle size you normally look at when you trade, or do you zoom in a little bit more?
No, this is the candle size because I want the big picture. I mean, I might do something like this, one magnification, but no, it's really down to this. I can see this really well this way, and I can see the moves, the pushes, all of it.
Okay, let's see. Oh, you were like wondering how you get Dow futures on hot forex.
Right click here, do show all to make sure all the symbols are being displayed. And then just put your, whoopsie, your cursor over, like here's the S&P 500, here's the Dow. It'll show you, see it says Dow Jones Mini Future, the USA 30. There's oil if you follow oil.
You have the currency futures in there too?
No, not on this platform. I do on my Thinkorswim platform. And you know, I used to trade currency futures, but I haven't in a couple years.
Do you know of a platform that gives you free futures charting?
Yeah, Thinkorswim. Well, it's
you
not.
pay for it though, right? It's not free.
No, it's free.
Thinkorswim is free?
Yeah, as long as you have money in your account. Yes. You mean free as in if you're just demoing?
Yeah, exactly.
No, you have to put money in the account, I think. They were just recently acquired by TD Ameritrade, and I think they required that you actually have your account funded before you can see real up-to-the-minute data and get futures quotes for free.
Actually, Lisa is mentioning that Windsor MT4 has all of those for free.
Oh, okay.
Kim, Ron wants to know, is the dollar Swiss making a second leg M over 4 or 5 days on the 15-minute chart?
Let's go take a peek. A second leg M. Okay. Whoops.
Second leg of an M over 4 or 5 days, so you're going to have to scrunch it.
Yeah.
Oh, yeah.
I don't know.
What?
It's above these highs over here.
Wait a minute.
So not yet. I don't think it is yet.
4.
It's above. I don't know
Said
what this candle
4
is
days.
here.
I'm wondering if he's talking about what might be the right shoulder on the 7. I couldn't see. You moved it.
Right shoulder? You mean?
Yeah, on the about the 18th there, the way you've got it right now. I wonder
Right
if that's
here? Here?
no, the next one over. I wonder if that's what he's talking. He said 4 or 5
18.
days. 1, 2, 3, 4, 5 days would be right. Yeah, right there.
Well, it looked like initially it was 3 hits right here,
Yeah.
but it's gone above that now. So I don't know. Let me look on the hourly and then try to blow it up a little bit. You know, I guess we had said that this was in level 3, but I don't really see that this is in level 3. I see it as still in level 2 because I see this as level 1 and then this is all level 2 in here off this trap move peak formation low. So I see this as 1. They came back and this is all 2, so I don't know. They still could be going up. So right now, I don't know why that line's there. Must be an old line. Right now, price is just kind of not doing much. I mean, let's look at the candles. What are they doing? I mean, they're not really doing anything. So I wouldn't say that's a multi-day M that's forming right now. Not yet. There's not enough candle information to assert that. And here's a higher high right here. You know, now if it comes up to here, this level, yeah, that's like the 8,000 level, which is only like 50, 60 pips up. Then you might have something up there. Okay, because that's like the highest peak on this hourly. Yeah, I mean that's where ideally that's where you'd want it to come up to, and look for some sort of confirmation that you have an M up there is up here. So 60 pips away, basically, 60, 70 pips away from where price is currently. Okay.
Okay, they were asking you questions about, there's a lot of like little things about, like for example, would you call the euro half a Batman to the downside of the water on the 1 hour chart?
On the euro?
Yeah.
Did you say car?
Yeah, euro.
Euro. Okay, sorry. Didn't hear what chart you said, or pair. Half a Batman meaning down here?
No, up there.
Oh, this is a confirmed W.
That's a confirmed W. See?
This is a confirmed W.
Even on
See?
the 1 hour chart,
Spike
you can
down
see
here,
it.
they spike below.
And then
Railroad tracks.
Perfect.
Yep. Beautiful. Lovely. And close inside the prior day's low. This is a confirmed W. Yep. Yep.
Just
Okay,
please
can you please?
explain.
Yeah, go ahead. Go ahead. Go ahead, Granny.
Go ahead.
Let's do the same thing. Go ahead. No, go ahead.
Joe wants you to please explain the 50% of the candle trade entry concept.
Oh, sure. Okay. So let me go to my chart here. Whoops. Let's bring it up. Okay, so when I'm looking at a confirmed M or a confirmed W and the second leg is a railroad track, in order to manage the risk on the trade and in order to get the most optimum entry price, I like to wait for price to come halfway into the track. Then I enter it short because this was a confirmed M with the second leg as the railroad track. This way the stop loss now, instead of entering right here on the close of the track and having the stop go as wide as the entire candle plus your cushion above, you now get to calculate your stop from this point upward. So now you've reduced the risk in the trade and you also enter at a much better price because now your pricing is higher than, say, down here if you enter on the close of this candle. So now you will get into profits that much quicker. You know, and if these candles, I think this candle was like 20-some pips. Let me go actually measure it again, or maybe even more, 28 or something. So this candle, and I measure from wick to wick on the candle, so it was 30 pips. So you come down 15 pips and you're already 15 pips ahead of the game once price turns in your favor than if you entered here. So there's two reasons. One, to manage the risk, so the stop loss is reduced. Actually, you reduce it by 15 pips in this case. And then you have an optimal entry price, so you get to profit. So instead of saying getting to profit way down here, if you entered here on the close, you get to profit here. So just, you know, just something to think about. You don't have to do it that way. It's just a suggestion. And does price always come back to these? Absolutely not. In fact, I had Peter from Dubai ask me, well, can you please explain what do you do when price doesn't come back? And I think there was an example yesterday or the day before, I can't remember when, but if it's a situation where you're near the water, and because I've seen trades where the railroad track is below or above the water, and if you have an opportunity to actually, if it starts to move away from you and it starts to clear the water, like this didn't close below the water right here, and you say you want to get in, say price didn't come up, say it only came to here, and then it closed back below the 13. You could have gotten in there because you're essentially getting in at the same entry point as if you had gotten in on the close. Okay, so the answer to the question is long-winded, and maybe I was confusing you, but if it doesn't pull back the 50%, you can always get in at a same price point as you would have if you hadn't waited for the pullback. And if you're near a moving average, even better.
Okay. All right. Yes, Jerry. Yes, she waits for the run back up to reduce her risk. So she waits for the pullback to take that trade.
Yeah, you can see I had to wait 1, 2, 3. I mean, I waited for 45 minutes for this to come back up, and then I actually entered on this as it started to pull up. So yeah, it takes patience because your natural instinct is I've got a confirmed M. It's going down, and you actually see price dropping in front of your eyes, and you're like, oh man, I missed the move. Well, not really. So just be patient, because I've seen it 9 out of 10 times it does come back. Okay? And Christ, I mean, this one came back and it went beyond the 50%, so. But 9 out of 10 times it does come back. I can guarantee you.
Okay. All right. Well, um, people are
Is
wondering
that
if
it? Should
when it
I?
pulled. Yeah. Last question. When it pulled back, do you enter on market or do
Okay.
you enter on limit?
Market. You can enter on limit if you want. I mean, on a pending order if you want. I'm just a real manual kind of trader. I like to enter my trades myself. I actually have the order box open and I'm ready to pull the trigger as it's on approach. Like when it's down here, I'm not doing much. And then as soon as it starts, I see it moving up, I open my order box and I get ready to enter the trade. And I watch. Okay. So no pending orders for me.
All right. Well, you're
All right.
sounds good. You're done.
Okay. Okay. Great.
All right. Fantastic. Let me just show couple of trades that people sent me, and it's just like one or two. Not. I mean, everybody knows it was the pound trade, and
Euro dollar.
and euro. So pretty much that was it. Everything else was just kind of choppy. Okay. So let me just quickly show that, and we'll be done.
Okay. I'll make you the presenter. Here you go.
Thank you.
Yep.
All right, guys. I'm sure you guys can see my screen, right? Just give me one or two yeses.
Yes, we can.
Okay. All right. Thank you. Thank you. Okay. This is from my buddy Ted. He actually took this euro dollar trade. All right, and he drew his W out, and his entry was right there, and he took his take profit right there. Okay, I'm going to stop moving my mouse that much so you guys can see entry was right here, A, and his take profit was right there, B, and he saw the stop hunt to the low. He knew that with the W pattern, right, and he went in. Remember we talked about confirmed W, second leg goes below the first leg. You can see the 3 pushes, right? 1, 2, 3 pushes to the low, 3 swipes, okay, 3 swipes to the low, pin bar below the first leg, trap, green candle long. Okay, great trade, Ted. And this is my buddy Steve Lewis. He actually grabbed euro dollar. He grabbed it right on that hammer, man. The minute the hammer hit and closed, he went in, spiked to the low of day, okay, and then it went 1, 2, 3, and then it went into consolidation. He saw 3 spikes to the high. Remember, this is the other confirmed pattern. It's 3 hits to the high. Steve talks about that all the time. It looked like a head and shoulder pattern, but it's 3 hits to the high. Steve talks about that as one of the confirmed patterns for him. That's the 3rd confirmed pattern, okay? But we'll talk about that at some point. And you can either get in here or you can get in here. Or like Kim said, you can get in the middle of that railroad track. Second leg is confirmed, right? So that was fantastic, great trade. So he grabbed this 50 pips right there. All right, this is, I'm going to butcher this name, man, Sois. He grabbed the same move, right? This is the euro dollar. 1, 2, 3 to the high. He grabbed it right off the high. Boom, it's over. Okay, he had to go out somewhere, so he just closed his trade. But okay, let me see. Cannot see the screen. Okay, how do you know that the spike is the spike to the low? Because it's below the Asian box, euro dollar. How do you know it's a trap move, man? Remember the candles Steve talked about? The candles, how the candles, formation of the candles, pin bars, spikes, spins to the low. The trap move is spike below the low, induce short, pull back and trap. And if it turns green, it's even better. And then you're off to the races. Okay? Okay, Nelson just sent an email regarding the pound dollar. He's still in the trade, by the way. He's still in that trade. I'll show it tomorrow, buddy. I'll show it tomorrow because, so you guys already, this is the pound trade I personally took. Okay, I saw the 3 hit to the low. I took this trade long, and then I went to sleep because that thing's going on today, and then I just kind of marked it off for you guys. Push 1, push 2, and then push 3 over here. So if you were trading for a reversal, your reversal is down here somewhere. Obviously the time passes and you're done, right? But the better trade, we went level 3. I was waiting for this, but I had to go to sleep, man. Okay, I had drawn this out already, and I was like, man, this is what I'm waiting for. I'm in level 3, and we talked about that earlier. Level 3, I'm looking for stop and high drop. That's what I mean. So what they did, they came out of the box, like Steve said, they widened the swing, breakout traders long, breakout traders short. They hit it once, twice, 3 times, and then they killed them. On all 3 times, on the 4th time, like Steve said, they're not going to take that trade. Going this way, they're not going to take the trade. That's the one that pays out. Okay, come out of the box, widen the swing, and you can see 1, 2, 3. 1, 2, 3. 3 swipes to the high, railroad tracks hold the level, shift red candle, and then it's gone. It's over. 1, hit the stop, drop, hit the stop, drop. It even give you a chance of railroad tracks, and then it just dropped right down there. Okay, hopefully that kind of helped out. Nelson was going to send me the exact shot. That the entry was right there probably. That's great. That's great. That's great. Not seeing the 3 that you speak about. Which 3? The 3 swipes. Here's the 1, 2, 3. Okay, and we were expecting stop and high drop anyway. We were expecting this 3 swipes to the high short. This was nothing. When you see these pins to the high, there was no inducing. You got to have vector inducing candle. The candle comes and it induces long, and then they trap and they hold it, and then they push it and they swing it. Okay. No. The pushes. Oh, you mean the pushes? Yeah, the pushes, not the swipe. Yes, the pushes are usually a third. Anyway, what I'm going to do is starting next week, I'm only going to start using gray charts because a lot of people have been, telling me that I need to change to the gray charts, and I agree. Okay, it's just that I've been using the black charts for such a long time because this is Steve's template, it's not my template. I mean, I'll just change the color in the background to gray. I mean, it's not a big deal. Then I have to change the color of my candles and stuff. But I mean, I'm sure you guys, even if once I change this to gray, it doesn't matter if I change the color of the candles, right? I mean, it's still the same. So, what's wrong with black charts? I don't know, man. People say they can't understand the same material if the chart is black instead of gray. So they see better with the gray chart because that's what they used to seeing. So we'll just yeah, exactly. 3 pushes to the low. That's why I took this 1, 2, 3. But I knew I was looking for stop and high drop, and I knew they're going to go above this high. So if you measure from here to here from your entry, you're like, man, if I have at least 25 pips, I'm going to take the trade. Why? Because if it's more than 25 pips, I take a scratch on the trade. There is no loss. Because they could come up and they form an M over here. You see? First leg. And they could come up and form a second leg here and then drop from here. They could have done that too, right? You don't know that. It just happened to be this way. Okay? All right, man. Yeah, I'm just going to change the charts. And also next week, since we are going to start the curriculum and all that kind of stuff with homework and stuff like that, I'm going to be doing everything that you guys do. Everything I'm telling you guys to do, I'm going to do also. So that way we'll do it together, and that way everything is going to stay uniform. Okay? There's going to be some structure. We're going to do that. It's going to be awesome. All right, guys. I think that's pretty much it. That's pretty much what I gotta say. I think it's been pretty, pretty awesome. Please use Firefox and Google Chrome to access the DMR videos should you need to do that. Okay, and we will see you mañana. Ray is going to be here tomorrow, so that'll be fantastic. All right, guys. Have a great night, everybody.
Frank wanted to know how to get in touch with you to join for next week.
Oh, I'm going to mention that tomorrow. I'm going to talk about that tomorrow, and
okay.
Yeah, for next week I'm going to talk about that tomorrow. So we'll see you guys, man. We'll see you guys. Okay. Have a good night, guys. Ciao.
Good night.
Good night, everyone.